Hello, everyone, and welcome to our brief explanation of the 1099. It's that time of the year again. We are probably receiving a lot of different documents that you're holding on to that are going to be important for your tax filing before April 15th. And among those important documents may be a 1099 you may receive from either Ameritrade or another custodian where your investments are held. And we wanted to take a brief moment here to go over some of the things. Some of the more common areas of the 1099 that are going to be important for your April 15th filing on your 1040. Now, we're really going to focus on this section here, which is probably the most relevant section when it comes to investments, which is the 1099 DIV, and this is going to be all your dividends and distributions. We'll start off with line 1A, which is going to refer to the total ordinary dividends, where this also this is the most common type of distribution, and they're paid out of earnings and profits of the issuer. This will also include lines 1A and line 5, which is going to refer to a new tax law, a new addition in the tax law of the Section 199A dividends, which will qualify those dividends. We'll get to those in a minute for different treatment. We'll move on to 1B, which is going to be your qualified dividends. These are going to be dividends issued by a qualified foreign corporation or U.S. corporation, and it's going to be given different tax treatment as well. It's going to be taxed at a lower tax rate. So that's why they're going to be pulling these out, even though they're included in line 1A, they're going to be pulled out just so we can give those the special consideration that the tax law allows. Section 2A, we're going to see your total capital gain distributions, and they're paid by mutual funds or other RICs or regulated investment companies and real estate investment trusts. They're not capital gains from selling or trading stock or securities within your account. So these are distributions that are paid by the issuer. Line 3, non-dividend distributions are distributions that are not paid out of the earnings and profits of a corporation or mutual fund. So these are really referred to as return of capital. They do reduce the cost basis and security, but they're not taxed until you have a return of basis or you sell the security. Line 4 will be pretty straightforward. Federal income tax that is withheld. You may or may not have requested to have a certain amount of a distribution withheld. That's where this would show up. But in this case, unless there is special treatment, you might see a 0 here. But it's a way to know if there was any tax withheld from Ameritrade. And those are going to be your most important places. Section 5 will actually separate out from your total ordinary dividends. Those are referred to what I was saying earlier as the 199A dividends, and those are going to be given special treatment, really in a different part of your taxes. So they're going to pull those out of the total number, and when it comes to all of this, we highly recommend that you do reach out to a tax professional when you can, or give us a call. There's going to be some, even though just for instance, your qualified dividends, even though they are issued by a qualified company, there are going to be other restrictions or qualifications that have to be met in order for them to be, even though they're on this line, they may or may not qualify for that special tax treatment. It could be something, as long as to look into how long, or the qualification might depend on how long the investment was held. So it's just important for all these instances. If you are unclear, please give us a call at the office or refer to your tax professional. Thanks a lot for joining us. And like I said, if you have any questions, please feel free to reach out to us.